But what's interesting here is this, looking at the SLV, which is the world's largest silver ETF. I think they hold of the order of about 550 million ounces of silver in their vaults, or it's held for them by their custodian, JP Morgan. But so what we can see here is that since mid-December, so I've highlighted the black line there, and that's the vault stocks of silver. That decline there is the equivalent of approximately 16 million ounces of silver declined since mid-December, while the blue line is showing the share price has gone up of the order of about 30% at the same time. Since when do we see a declining interest by investors in an asset which is rising 30%? It doesn't make sense. And it looks to me like the silver shortage is getting so intense that every means possible is being used to secure physical silver to provide liquidity to the exchanges.
The silver market is currently witnessing a historic sea change as spot prices rocket toward $90 an ounce, leaving the paper-based financial system in the dust. While gold maintains its record-shattering climb toward $5,000, silver is the real story, recently surging 27% in just the first 2 weeks of 2026 and creating a short squeeze of unprecedented proportions. Physical liquidity is vanishing, major mints have run dry of silver bars, and global exchanges are scrambling to secure metal as demand outstrips supply for the 5th consecutive year. In this eye-opening discussion, silver expert David Jensen reveals the hidden forces driving the metal surge, from a 16 million ounce drop in SLV ETF holdings despite a 30% price jump, to global shortages forcing mints like Perth and the Royal Mint to halt bar sales. He blames reckless central bank policies and economic pain in North America, urging investors to secure physical silver amid high premiums in China and India. But is the silver market on the brink of a total reset? Could it become our parallel currency in chaotic times? Watch to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think that is the underlying driver of the demand that we're seeing right now for silver, as well as, of course, the whole concept of the debasement trade in terms of people trying to secure assets, as we've seen the incredibly reckless and loose monetary policy that have been operated by the central banks for decades now, but really it's coming to a head now. I think people can see that there's incredible pain in the Canadian and US economies right now. It's not shown in the overlying numbers, but there are very strong indicators that the consumers are suffering. And I think that on top of the fact that there's an awareness of this problem in the market is combining now to drive people to secure physical metal. I think that it's been a long time coming. It's amazing how long information diffusion takes, but once it gets a grip, man, does it ever move fast. And I think that we're, the stuff we're talking about now quite widely in the markets, 5, 6, 7 years ago, I talked to people about it and they would look at me like I had two heads. And so it's funny to see it becoming mainstream and seeing the buying of the physical metal going mainstream as well. We've seen the miners, especially select miners, have extraordinary runs higher in their price here over the last 30 days. And what we're seeing today, Friday, is the options expiry day for January in the U.S. and banks and their trading houses have been shorting mining stocks into the market as they usually do, and they are facing material losses now in terms of providing liquidity in this market in terms of selling these options. And my instinct is that we're going to see heavy selling in the New York market, the CME market for silver, and in the silver equities today in an attempt to limit the losses that they face. So hasn't been a good 30 days for them, that's for sure. The demand, it's a global demand for silver. And what we're seeing is the Shanghai price close today, Friday, at $101, equivalent of $101 US, and that we're still seeing a mid-teens price premium in India for silver. And so when you have that kind of a price differential, it's going to draw physical silver with time. It takes time, but it draws physical silver because of the arbitrage there to meet the market demand. And so what is interesting is that over this time that we've seen the silver ETF, maybe you could just scroll down there to the diagram that's below that. So there you can see the increasing premium. So we've got like 89 versus $101. That doesn't work over time, first of all, right? It just doesn't work to have that kind of a price spread between these two physical markets. There are transportation media in the world that will solve that problem. But what's interesting here is this, looking at the SLV, which is the world's largest silver ETF. I think they hold of the order of about 550 million ounces of silver in their vaults, or it's held for them by their custodian, JP Morgan. But so what we can see here is that since mid-December, so I've highlighted the black line there, and that's the vault stocks of silver. And so that decline there is the equivalent of approximately 16 million ounces of silver declined since mid-December, while the blue line is showing the share price has gone up of the order of about 30% at the same time. So, since when do we see a declining interest by investors in an asset which is rising 30%? It doesn't make sense. But there are these things called authorized participants, which is basically banks, bullion banks, who participate in the ETF, and they can turn in baskets of shares. I believe it's 10,000 at a time, or 50,000. I can't remember. But they can tender these shares and receive these 1,000-ounce bars at the exchanges in return. And it looks to me like the silver shortage is getting so intense that every means possible is being used to secure physical silver to provide liquidity to the exchanges. Having read The Great Taking and looking at globally at bank balance sheets and seeing how leveraged the bars are to the debt markets, I am not personally, and this is not investment advice, of course, but I am not a proponent of holding equities or any financial instrument in the market over time. I think one would just be asking for it, given the backdrop that we see with the instability globally. So the whole concept of silver and gold, and I think especially in the time to come, is to hold it directly in your legal possession through whatever means is best for people. But I think the future here is about physical assets and separation from what I believe are fraud centers in the financial markets. We're seeing basically a transition of, and this is just at the margins, but it's enough to affect the market because of the leverage in the market, right? The paper claims versus the actual available physical globally, that we're starting to see people vote with their feet and securing physical metal. And I don't think that looking at any of these market indicators or pricing indicators, such as RSI, relative strength indicators, it matters right now. What we're having is basically a sea change is underway, and it's not day-to-day trading activity that is measurable in any way using these market price stochastics. So I think that we're heading into a new world, and that the physical shortage is driving a problem globally, which is insoluble at current prices. And but I see these metals moving up by many multiples in terms of fiat price. But I see an intense shortage building now in the market in terms of availability. I had an interesting talk this week with a large bullion dealer. really it was interesting to hear, like Perth Mint right now has no silver bars for sale. They're only selling 1 ounce coins, and the Royal Mint in the UK there has no silver bars for sale at all. They're only selling 1 ounce and fractional silver coins. And the US Mint, despite the fact that it's legislated to provide silver coins, bullion to the market in whatever quantity is necessary to meet market demand, they're delivering silver to the market at 1/6 of the rate that they were providing it in 2024. So we're seeing, a decline there. There is a lot of silver above ground, and we're with the price reset that is coming. And I don't think Klaus Schwab was talking about the silver market, but I think it's inevitable that we're going to have a price reset, that this stuff is going to start to move, and you're going to see it moving in very, very interesting ways. And because of the destructive input of government currencies, destructive impact of government currencies on society as a whole, I think it's inevitable that these billions and billions of ounces, and there's 25 billion ounces above ground in total in all applications. But it's inevitable that these billions of ounces that have been frozen as a monolith now for decades because people have forgotten about it, that as the economy and as the currencies decline together, that we're going to see a rotation of this metal throughout our economy, and it's going to operate as a parallel payment system, much to the chagrin, I think, of our central planners.
As the traditional financial system grapples with fraud centers and extreme leverage, the shift toward a parallel payment system is becoming a reality. David Jensen emphasizes that silver isn't just a trade, it's a vehicle for voting with your feet to exit a declining fiat economy. With 25 billion ounces of silver sitting above ground in a frozen monolith, a global rotation of this metal into the hands of the people is about to ignite. This isn't just about market stochastics, it's about a fundamental sea change in how we define and hold wealth. Will you be holding physical metal when the price reset finally breaks the central planner's grip? Share your thoughts in the comments section below. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.